friends. In our previous talk, we mentioned investing in the stock market. Today, let's talk about mutual funds. Investing in the stock market is good, but it needs research and keeping an eye on your money. Sometimes you might not have the time or knowledge for that. But don't worry, you can still invest in the stock market with mutual funds. Mutual fund schemes are run by companies that manage assets or funds. They have expert fund managers who are professionals in analyzing and overseeing investments. These fund managers work to make sure investors get good returns on their investment. But it's important to know that there are fees for these investment services. Mutual funds invest your money in different parts of the capital market, like stocks and bonds. To understand how mutual fund works, it's essential to know about NAV, which stands for Net Asset Value. You purchase mutual fund units based on NAV rates, and these rates change every day. The NAV rate depends on how well the investment in the mutual fund are doing. For instance, if you want to invest 500 rupees in a mutual fund with a NAV rate of 10 rupees, you would buy 50 units of that mutual fund. You calculate the number of units by dividing your total investment by the NAV rate, like this. Total investment divided by NAV rate is equals to number of mutual fund units. Now, when you decide to sell your mutual fund units, you'll get money based on the NAV rate for that day. Let's say the NAV rate for that day is 20 rupees. So, if you sell your units, you'd get 1000 rupees in return. You have the option to purchase or trade mutual funds through two primary channels: the official website of the mutual fund company or through authorized distributors. When it comes to investing in mutual funds, you can opt for two main modes: lump sum or through a SIP, which stands for Systematic Investment Plan, which offers the flexibility of monthly, quarterly, or half-yearly contributions. SIP provides you with the advantage of navigating various market conditions strategically. When purchasing mutual funds, it is mandatory to undergo a KYC, which stands for Know Your Customer procedure, by submitting valid identification documents, ID proof, and proof of address. There are three primary types of popular mutual funds. Number 1, equity funds. These funds direct your investment into the stock market. They offer the potential for higher returns but also carry a higher level of market risk. Number 2, debt funds. In debt funds, your money is invested in government or corporate bonds. These funds tend to be more stable and safe with moderate returns as they are less influenced by the market volatility. Number 3, hybrid funds or balanced funds. Hybrid or balanced funds provide a blend of both equity and bond market investments. This diversification allows you to benefit from the strengths of both markets, offering a balanced investment approach. Mutual fund investments offer several clear advantages. These include diversification of your portfolio, the potential for good returns, and a range of investment options to choose from. Professional fund managers expertly oversee and transparently report on your investments, ensuring effective management. Moreover, mutual funds are subject to strict regulatory oversight by SEBI, making them a secure and reliable investment option. One notable advantage is the liquidity of mutual fund investments. There is no lock-in period, allowing you to liquidate your investments promptly if needed. Additionally, capital gain remains tax-free until you decide to withdraw your investments. Furthermore, you can also avail tax benefits under Section 80C, making mutual benefits a tax efficient investment choice. Before you make any investment decisions, it is essential to conduct thorough research and study. Consider investing in the available mutual fund schemes to potentially earn good returns. Best of luck with your mutual fund investments.
Let's see how much you understood on mutual funds. Question 1. Please select the appropriate statement related to mutual fund. A. Mutual fund invests investor money in different fixed deposits schemes offered by banks. B. Mutual funds channel investors funds into a variety of capital market assets, including equities, bonds, and more. C. Mutual funds channel investors funds into post office schemes. Answer. Option B. Mutual funds channel investors funds into a variety of capital market assets, including equities, bonds, and more. Question 2. What type of investment strategy is it when Pradeep invests 1000 rupees in mutual fund every month? Answer. SIP. Systematic Investment Planning. Question 3. Who manages the mutual funds? Select the correct option. Option A. Bank officer. Option B. Government officer. Option C. Fund manager at asset management company. Answer. Option C. Fund manager at asset management company. Please subscribe to our YouTube channel and hit a like button if you find this video helpful. Thanks for participating in the ArthShikshan initiative.